In the crypto world, it's not every day you see a project's price chart telling one story, while its fundamental growth is telling a completely different one. But that is exactly what's happening with Pi Network right now, here in October 2025. We've got a technical correction that seems to be clashing with some really incredible signs of strength. So, what's the real story here? Is this a correction, or is it a golden opportunity? Let's dig in and find out.
So this really is the core puzzle we're trying to solve today. How can a project's market value be dropping when under the hood it's actually building and gaining some serious momentum? I mean, what gives? Is this a warning sign that traders are seeing something the rest of us are missing? Or is this a massive opportunity in disguise? We're going to break down both sides of this argument. All right, first up, let's tackle the bearish side of things. If you're only looking at the short-term price charts, well, you're gonna see some pretty clear warning signals that have traders on high alert. This is the story the charts are telling us right now. Okay, so the main thing that's got traders a bit nervous right now is something called a bearish flag pattern. Now, in simple terms, just think of it like a pause in a downtrend. You get this sharp price drop, right? Then the price kind of goes sideways for a bit, maybe even ticks up slightly before potentially continuing its original downward move. It's a classic sign that the market is hesitating. So this table kind of maps out the key battlegrounds for Pi's price. Right now, it's testing a really crucial support level at about 26 cents. But here's the deal. To reverse this whole downtrend and start climbing, it has to smash through two key resistance levels. These are called EMAs, or exponential moving averages. Think of them as ceilings. First, it's got to get past the one around 40 cents, and then there's an even tougher one up at 48 cents. But okay, here's the silver lining in this whole technical picture. The price has been holding this 25-cent support line and holding it strong. What this tells us is that there's some significant buying interest stepping in at these lower prices. It's like the bulls are drawing a line in the sand at 25 cents, and so far the bears just haven't been able to cross it. This could be the foundation for a recovery. Okay, so we've looked at the short-term charts. Now let's zoom out and look at the bigger picture, the fundamentals. And trust me, this is where the story gets really interesting, because what's happening behind the scenes paints a very, very different and much more bullish picture. This is the story of long-term strength. Just take a look at this number for a second, 17.5 million. So what does that even mean? Well, that is the total number of Pi tokens that have recently been moved off of centralized exchanges. And get this, in just one 24-hour period, over 15 million of those came from a single exchange. We're talking about a massive, massive shift here. So why is this such a big deal? Well, it's pretty simple, really. When tokens leave exchanges in huge numbers like this, it usually means one thing. People are moving them into private wallets, into cold storage for the long haul. They have no intention of selling anytime soon. This takes a ton of potential selling pressure off the market, and it's widely seen as a huge vote of confidence from serious investors. And that long-term confidence is being fueled by some major technological leaps forward. The project just hit a huge milestone. They successfully launched a fully functional decentralized exchange, a DEX, and an automated market maker on their testnet. This is basically the engine, the core infrastructure you need for a self-sustainable DeFi ecosystem, and they've done it right before the mainnet is expected to go live. The timing is huge. Now, underpinning all of this, all the tech, all the token movements, is Pi's single biggest asset, its community. And I'm not kidding. We are talking about a network of over 50 million registered users. That makes it the largest mobile blockchain community on the planet. Millions of people are active every single day across more than 230 countries. The scale here, it's just staggering. And look, this massive user base isn't just some big number on a screen to brag about. It's actively being transformed into real-world utility. This is where the rubber meets the road. We're seeing a whole ecosystem of apps growing up around it, peer-to-peer marketplaces where people are actually transacting, and even partnerships with local merchants that let people use their Pi to pay for real goods and services. So, okay, we have this clear clash, right? Bearish technicals on one side screaming caution, and bullish fundamentals on the other screaming opportunity. So what does this all mean for an investor heading into the last quarter of 2025? Well, the analysis lays out two pretty distinct paths forward, and it really depends on your own strategy and how long you're willing to wait. Okay, so let's break this down. If you're more of a conservative, long-term investor, the thinking is to maybe use a dollar-cost averaging strategy, accumulating tokens slowly around that strong 25-cent support level. But if you're a more active trader, the game is a little different. It's about trading the current range we're in while keeping a very close eye out for a decisive breakout above 32 cents. That would be the signal that a real reversal is on. And now for the fun part. What if the bulls do take charge? What's the potential upside here? Well, according to the analysis, the first major step would be to reclaim that 40-cent resistance level. After that, the main target would be to challenge the previous highs around 65 cents. And in a really optimistic scenario, especially after a successful mainnet launch, we could see prices pushing past 80 cents. So let's just quickly recap the whole bullish case here. You've got record token outflows signaling some serious trust. You've got the key DeFi tech, the DEX and AMM, already working on the testnet. You have the world's largest blockchain community, and it's still growing. That strong price support at 25 cents is holding like a rock. And all of this is building momentum for the main event, the mainnet DeFi launch, expected this quarter. And all of that, it leaves us with one big final question. We have this technical correction that's creating what could be a really attractive entry point, and it's all happening against a backdrop of fundamentals that are getting stronger by the day. The stage is absolutely set for a pivotal fourth quarter, and it really leaves you wondering, is this the moment? Is this when that massive, real-world utility finally overwhelms the short-term pressure we're seeing on the charts?